Hello everyone, and welcome to this guide on a powerful tool that helps detect shifts in market sentiment by combining momentum with price action. This indicator plots dynamic zones directly on your price chart whenever there's a significant change in momentum, turning invisible oscillator signals into visible support and resistance areas. These zones highlight where the market sentiment likely flipped in the past, making it easier to spot potential reversals, breakouts, or high-probability reaction points. It's great for traders who want to bridge momentum indicators with actual price structure. Let's dive in step by step. Add the indicator. First, open your chart on TradingView. Click on the Indicators button at the top of the screen. In the search bar, type RSI Shift Zone and look for the one by Chart Prime. Select it and add it to your chart. Once added, you'll see colored channel zones appearing directly on the price candles whenever certain momentum conditions are met. You can customize settings like the RSI length, default is 14, overbought level, default 70, oversold level, default 30, and whether to show RSI value labels inside the zones. Feel free to tweak these based on your time frame or asset. How it works. When the RSI crosses above the upper level or below the lower level, a new shift zone channel is immediately created. The channel's upper and lower boundaries are anchored to the high and low of the candle where the crossing occurs. A midline, the average of the candle's high and low, is drawn for clear visual reference. The channel stays visible on the chart for at least a user-specified minimum number of bars, default 15, ensuring only significant shifts are emphasized. The channel is color-coded to indicate bullish or bearish bias, changing dynamically depending on whether the RSI crossed the upper or lower threshold. Optional labels displaying the exact RSI values can also be placed inside the zone for additional clarity. How to use. Now, let's talk about how this works in practice. The indicator uses a standard RSI calculation. When the RSI crosses above the upper threshold, typically 70, it signals strong bullish momentum and creates a new zone on the chart based on the high and low of that candle. This zone is usually colored green or bullish, indicating a potential area of trend strength or future support. Conversely, when the RSI crosses below the lower threshold, typically 30, it signals oversold exhaustion and bearish momentum shift, plotting a red or bearish zone on the chart. These zones act as dynamic support and resistance levels because they mark the exact price range where sentiment flipped historically. Treat the channel's high/low boundaries as dynamic breakout lines. Watch for candles closing beyond them to confirm fresh trend continuation. Use the midline as an equilibrium reference for pullbacks within the zone. We were scanning the zone when we spotted a breakout. This signals that buyers have stepped in strongly, pushing the price toward a new higher high, making it an ideal spot to enter a long position. Remember, these zones are most reliable in trending markets or at key structure points. Combine with volume, higher time frames, or other confirmations for best results. Practice on historical charts to see how price respects these sentiment shift areas. That's it for this guide. Simple yet effective for spotting where the market momentum changes hands. Thanks for watching, and happy trading!